Alright, guys, welcome back to a new episode of this show, Trading Supply and Demand for a Living. Today, we're going to break down a supply trade that I took on US 30, guys, and I'm going to tell you guys what I was thinking during the trade and why I ended up taking the trade. So, as always, don't forget to subscribe, hit the like button, guys, and let's get started. So, we have US 30 over here, guys. The three things why I think. So, this setup was a fail. I lost on the setup. I could have won on a re-entry, but I didn't enter again. But I'm going to break down why I think we lost on this setup. All right. So first thing, the time. Time is very freaking important, guys. By the time this tabbed the zone, it was 10:55. You guys know I have said it in previous videos. I don't like to trade supply and demand after 11 a.m. So 10:55 candle tapped and closed bullish. So the next candle is the 11 a.m. candle. So my entry is going to be past 11 a.m. Every time I take a trade, mainly past 10:30, and if I take it past 11 a.m., I have a very high chance of losing. Doesn't mean that I'm going to lose all the trades, and doesn't mean I'm going to win all the trades before 11 or 10:30 a.m. Everything has a chance, but after 10:30 my chances of losing increase, guys. So that's why I am very hesitant on taking trades after 11. But today I took the chance. It was Monday, so I put something light on the risk, and then I took the trade. That was the first reason why I think this trade failed. The second reason, we was low as hell, guys. Look at this. We dropped, came back and dropped once again, and I'm taking a supply down here, guys. Preferably I would like to take a supply up here. All right, maybe this supply over here. Right, we want to take a supply as high as we can and a demand as low as we can, so we can increase the chances of us winning. If you take a supply that is low, might as well sellers are running out. So what it means when you're taking a supply, guys, is that you are selling at a price where sellers were interested in selling at one point. So if you guys can see right here in this candle, sellers push the price all the way back down and then back down again, breaking structure. So sellers were interested in selling at this level right here. So when they come back, maybe sellers are interested in selling again, and we might see a push back down, which is when we're going to be taking a trade. That's basically supply and demand right there, simplified. So when you want to take a supply, if you have sellers pushing the price here, then they come back and sellers push the price again here, then buyers come back, then sellers push the price again over here, right, to like here, and then buyers come back a little bit and sellers push the price all the way back down. Look how many times we have had sellers stepping into the market. Most likely when we are low and taking a supply, our chances of winning are going lower because we are selling low, and sellers are not stupid. The banks are not going to lose money. They're going to try and sell high, and they're going to try and buy low. So that's why they don't really push the market down here. So this setup was low as hell. And third reason why I think this was a loss, the EMAs, guys. EMAs, 13 EMA, 200. I didn't even pay attention on the EMAs at the time I was taking the trade until I was back testing the loss today, earlier today. So 13 EMA, 200 EMA, and 50 EMA, guys. You guys know when I'm taking a supply, I like to see the 13, the 50, and the 200. All right. So in this case, we didn't have them lined up. So this was a loss. Let me actually break down this gold trade that we had today, guys. This was a setup presented on gold, which I didn't take. This setup right here. So this supply, if you guys see what happened when it came over here, look at the EMAs, guys. Look at the EMAs. We got the 13, the 200, and the 50. And look at what happened. All right. Price taps the zone. All right. We're waiting for the break of the candle to get in, of course. Stop loss goes here and then TP on a 1-to-1. Okay, let's see what happened. So price goes up. Look at that. Look, do you see what happened? Price came down, gave the break of the candle. You got into a sell. Your stop loss is ceiling over here. Same candle lost. And then you started pushing up. You would have gotten in and gotten a fake out. Why? Because of the EMAs. Look at them. They're not lining up, guys. This is why I posted this one on my Instagram story that I was looking at this setup, but I didn't get in over here because I knew that the EMAs were not in confluence, and I don't like it when there's looking like that. And when I took US study, so much that I saved on that so much that I saved over there on that trade on gold that I didn't take it, and then I came to lose on US30. Ridiculous, right? On the same freaking thing. EMA is not lining up. But anyways, I didn't see it at the time, guys, because the 50 and the 200 were so far from the price. I'm looking down here, and then the 50 and the 200 were over here. I didn't even see it. I was taking the trade on my phone, which sucks, guys. I prefer you guys to trade on a computer or laptop if you guys can. But yeah, I didn't see it right here. I was like mainly focused over here, but that was another reason. And then yeah, let's just go on with the trade. So US30 came back to that supply. It tapped at 10:55, so candle entry will have been past 11 a.m. Stop loss goes above here. One thing that I did like about the trade is that it had a break of structure, and another thing that I did like is that we were also rejecting the zone and not closing candles inside. Another thing that I did like is that it was rejecting the 13 EMA, not closing above it. And another thing that I did like as well is that we're kind of taking a liquidity graph from these highs over here, kind of a liquidity graph to go back down. But again, we're selling low. EMA is not in confluence how I want them to line up, and it is past 11 a.m. so volume starts coming down, and we see usually reversals. So every time you see New York like coming down the whole session, usually after 11 it might want to pull back and go up a little bit or consolidate. All right, most of the cases. So let's see what happened. I got my entry next candle. Yeah, right here I got the entry. So at this point, oh, let me show you the account, guys. I forgot to show you guys the account. So here's the account. We are sitting at 50,471, and as you guys can see, let me see if I can show you the same. Well, PA Apex, you guys can see it right there, is a PA account that I have with Apex funded account. So 50,471, we ended up losing like $370, I believe it was something like that. So this is why I was able to cut the loss. I was risking like $500 on this trade, but I was able to cut it at 370, just because whenever I saw this break over here, I'm in the trade, right? And I'm like, okay, so now that we came back down, all right, and we gave the break of the candle, I don't want any candle highs to be broken. This candle closed bearish, but it closed with some rejection to the downside. So the next candle, it is okay if we break this high. It's okay because it's so close to the candle entry, and we still have the 13 EMA right here. It's okay if we break that candle high, reject anyway anywhere over here, right? We can reject any way over there between this candle high and this candle high. We can break that candle high, reject the 13 EMA, and come all the way back down. All right, I'm fine with that. But if it breaks above this candle high, I'm completely out of my position, because there is no reason for you to break above this candle high. If it breaks above that candle high, now we're also breaking above the 13 EMA, which has been rejected once and twice. Now we're going to be breaking above that EMA. We're going to be breaking above candle highs in a supply zone. I don't like that, guys. So this one is fine, but this one is a no-no. All right, so next candle after that broke the candle high, exactly the one that we use close right here. I'm still holding the position at this point because we're still under the 13 EMA, but I'm not liking the position. I'm already not liking the trade. Why? Because this is a 3 candle reversal. If you guys see this, this is a bearish candle, this is a pin bar, and then we have a bullish candle engulfing the previous candle. So look at the body of this candle, how it engulfed the previous candle and almost the other one as well. And we're also showing rejections to the downside, kind of like in this support level, we can say. So I'm not liking the trade at this time. If it breaks this level right here, I'm completely out. And the next candle broke that level. I got out of the position like right here for a $370 or $30. I don't remember what it was, but it was like a 300 and something loss. And then after that, look at that, how perfect it is to cut the losses, because then my stop loss will have gotten hit. My stop loss again is sitting right here above that candle high right there. It will have gotten hit right there on that candle. And this is how you know it, guys. Like, I knew already for a fact that if we break this candle high, there is a 80% chance, very high chance, guys. I don't say it statistically. I don't know if it is in 80%, but I'm saying there is a very high chance that if we break this candle high, we're also going to go back inside the zone and probably retest above this candle high or even go up. So I wanted to get out right there, and that's what I did. But then after that, it rejected again, didn't close any candles inside the zone, and then the re-entry will have won. and it literally went for like a 1 to 2 on a re-entry. All right, but then look at what happened, guys. Literally started going back up. Reversal. Again, I told you guys after 11 a.m. reversals or consolidations they come in. So you really have to be careful. I don't really like trading up after 10:30, 11 a.m. And sometimes I win and sometimes I don't. But based on back testing, and this is not something, 11 a.m., the magical hour. No, no, no. Based on back testing, I have done my back testing. I know that after 11 a.m., it loses the most, guys. It loses the most. Mainly, like after 10:30, you still have like a short window until 11. But if you take a trade past 11 a.m., there is a high chance, especially if we have been dropping already on the session and you're taking a supply going with the session, this is not going to be dropping for the whole day. So there is a high chance that you're going to lose or get faked out. You win, but you get faked out on the first trade that you took. So going forward, I'm not going to be taking any trades after 11 a.m. No matter what. In my entry is 11:01, I'm not taking the trade. Fuck that. Because I don't want to keep getting on losses like this that I know are going to be losses and I still take the chance just because they look alright and I have seen that past couple of days, like last week, we had good trades after 11 a.m. That I didn't take. So I took the chance of this one and look at that, it fucked me up. So if I got rules, I'm going to stay with them so that we can make it better on the challenge and try to take as less losses as possible. So that is it for today. Nothing else to say, guys. As always, make sure to subscribe, hit the like button, and I haven't forgot about you guys that want the strategy video. I am still doing the strategy video. I'm going to upload it this week. I know I said the weekend, but I was in the beach this weekend, guys. I forgot that I had a beach trip. So yeah, it's going to come up this week. But with that being said, thank you so much and see you all in the next video.